All right, a good day to all. Sam here with you on Tuesday, June 12th. Kind of late morning here. As I will remind you, we poll our members, and that's how we decide what gets a video analysis here. Now, I want to remind you to follow us on Twitter because we're doing a lot of promotion there. Where if you're interested in taking a closer look at what we offer over in the Discord, we've got some free channels where you can kind of get a sampling of what we do over there. And we're polling our Twitter followers now on a pretty regular basis for their input on what assets they'd like to see reviewed here in video, whether that be crypto or more traditional assets. On Tuesdays now, we poll our members and let them decide what's going to be reviewed. And clear winner today was for Netflix. So I've got Netflix up here, and we've done this coin. I've posted here on YouTube as well with an analysis of this coin. Now I've changed my count, my longer term count, just a bit. Well, more than just a bit, actually. Which I'm going to walk you through here now. As I'm sure what people are interested in is what's happening over here on the hard right edge of the market. Now, I have us in the fifth, potentially now what would be the fifth of the fifth of the fifth of the very much larger degree, potentially third. So to really look at this, I've got to back you up a little bit. So I'm working from a 3-4 down here, but to put this in context, now we'll return to this. All right, so let me go out to a daily. All right, now if we look at it here, without just as you normally would, if you just look at it here without any log scale or changing it to how you're going to view it. It's really hard to see the subdivision, particularly when you start going back here because of the parabolic move here. It compresses all of this. So if we go to log scale, we get better separation. Now let me go to auto and we can see that. So I actually think I've got it. So we all the way back here. I think to get a better look at it, I'm gonna go to 3-day, which, as I've mentioned to you guys before, I prefer to the weekly. So with that, so all the way back here to what is that, under 35 cents. So going all the way back here. Now, previously, I had considered the count that we had a 1, 2, 3, 4. We're going up for the 5. But I think that this is now, given this extension that we have here, that this can be relabeled. So I think what we have is 1, 2, 1, 2. Now, part of the reason that I say that is that if this were 1, 2, 3, 4, well, you can look at that and say, okay, well, that makes sense. We don't overlap the 1. But look at the depth of the retracement. So now, granted, this is it's going to look different because I'm in log scale, so we compress the upper numbers. So if we look here, for this as a fourth, if we were going 1, 2, 3, 4, well, we're almost to the 887. That's extremely deep for a fourth. It's a common retracement for a second. I know that's deep even for a second. I'm going to move my pitchfork. That's deep even for a second. But yet there it is. Now, so structurally, again, we don't overlap here. So it, theoretically, right? This could be 1, 2, 3, 4, and we're getting an extension in the fifth. But I think it's a better count, and I can get all the subdivision that I would need to qualify it to play this as a 1, 2, 1, 2. It's more characteristic this here of a third, which would imply that if that count is right, we're looking for a pivot up here to be for the third. All right, so here potentially our fourth, maybe a return to the median line wouldn't be unreasonable. So there would be a 3, 4, and 5. So we'd have 4 and 5 completing here from this 2 to give us our 3, 4, and 5. And so that's the change that I've made there, given this ongoing extension. So as I sit here recording this, we've just, at least today, I think we put in new all-time highs. So let's go back to the daily here. So if I take it out of log scale, you see what I mean by not being able to get any separation here. So I'm going to stay in log scale. Let's get this back auto scale. So from that 1, 2, as I described it right here. So if I got to really dial that in there, that looks like that's our lowest low there. So there's my 2. This is often the case when you're moving time frames, and from traditional to log scale, you're going to have to tweak some of your pivots just to make sure they're right on those pivots. You can see it happen here as well. This is not unique to TradingView. That's very common in any trading platform where you're changing time frames. You're going to have to tap in on those pivots. Just make sure you've got them right. So here now as a 1-2, you can see, well, here was the first algo target. We've gotten through all of them. So no surprise given how strong this is. So it becomes a question of, can I get the subdivision here to make this count work? Now, looking at this in log scale, your eye looks at that and sees, oh, well, wait a minute. That looks to me as though the one wave is longer than the third. How about that? Right. So remember, the third wave does not have to be the longest, just can't be the shortest. Well, given what if I look at it here in log scale, it looks like 1's long, 3 is short, and 5 is long. So that couldn't work. Well, we got to measure that. We use the same tools here to see if it qualifies. So again, because I'm in log scale, it's going to distort your eye. So if I take the length of the 1 and project it from my proposed 2, I bring this over here, I get that right on that low. You can see here we're coming just shy of the 1618, most common target for a third. We're certainly beyond, here's 100% the length of the 1. Right, you see how the log scale distorts that. So 1-2 certainly qualified as a third, as it's longer than the 1. Get a nice, it looks like I get a triangle, so it looks like I get A, B, C, D, E come down for my 4, and then that was our launch point for this continuing to rise. You can see here I'm almost up to 5, 6, 1, 8, 6, 6, 1, 8. So we're into real extremes with regards to the extension here that we're seeing in the 5th. So if I think about where we might be going, I can take the length of the 1 and project it from my 4. You can see, well, again, we're well beyond the 2.618. We're approaching the 5.618. So, clearly these are extremes, and so we have an extension here in the 5th relative to this degree here, and it looks like if that's going to be my 3rd. So again, we're seeking the 5th of the 5th of the 3rd. Right, which would be the 3rd relative to this 1-2 here and the median line. So look how we've been contained and how the median line here has contained the market, and this geometry, these dominant pivots have contained the market. So the 0.5s have been in play here. So this continues. This is 0.5, the median line, half the distance to the upper parallel. So oftentimes that can come into play, and you can get kind of this bounce between the median line and the 0.5, as you can see here. 0.5, back to the median line, back to the median line, back to the median line. Perfect tap right here at the Vegas wave. So it looks like a reasonable place, and no, that could get taken out on either side. But right now it looks like that's framing the market rather nicely. So I stay with that. Now I'm going to go from the daily. Let's go down to a 2-hour here and dig into this last bit here. So from this 4 low coming out of this triangle, remember I said we counted that triangle, coming out of that triangle, I've got all of the ingredients here to give me a nice 1 wave. So again, remember it's distorted because of the log scale. So I've got a 1, 2, 3, nice little ABC, rip up for my 5, completes a 1 wave. ABC down for my 2. Right, returning towards the median line. Then I get my little 1 wave here. I got an ABC down for a 2, right taps the median line. Now we rip from there. So if this is 1, 2, 1, 2, in green here, this is my 3. So I've got just what I need here. I've got just the right subdivision here. I've got an impulsive 5-wave structure to give me a 3 relative to this 1, 2. Come down for an ABC. There's my 4. And now as I was just describing, we're in this extension here. We're pushing in to get the 5th of the 5th of the 5th of the 3rd of the largest degree. So here's how that stacks up. 5th of the 5th of the 5th of the 3rd. It sounds a little absurd when you say it that way, but remember, it's waves within waves within waves. So at some point, there's the 5th of the 5th of the 5th of the 5th. Right now, we're just looking for the 3rd. So as this is playing here, it looks like from this 4, where I get my nice little ABC correction, I got 1, 2, 3, 4. Now, last time I looked at this, it was potential that we had an A, B, and we were going for a C with possibly a truncated C. But at this point now, given what we're seeing here, this looks more likely that I've got my 4 in here with this ABC, and I've just done a 1, 2. And now we're in the process of trying to get up to a 3rd. Now I've got this hypothetically laid out here based on just a simple measure of the length of my 1 projected from my 2. Most probable spot for my 3rd is the 1.618.175. So we could do it a couple of different ways. So I like to draw these hot boxes, so I know that's a contender as a target. So I've got a potential third here, target, assuming we continue to roll. Right? We've made 100% length of the one, so I have the ingredients here for this to be a third. Now, we don't know that we're going to get up here, but that's the logical location for that third. That's the highest probability. Retrace for the 4. So the next trade, if you're looking for a long, the next trade is to wait for the 4 and catch the 5. Now, if I take that out of log scale, it might look a little bit better. So we'd be talking about, again, I'm hypothetical here. So approximately, let's call it 350 with a target up here at 436, call it. Nothing wrong with that. But I would not, as we sit right here, I would not be a buyer here at all-time highs. Right? That's just me. I don't like to buy at retail. All-time high, that's retail. I'll wait for a retracement, just like this was the last trade. We get a nice retracement. Even if I blow that up, I'm sure looks like that's golden zone. So let's check it. So from the low to the high, we got through it just barely. So it suggests that potentially now we have higher probability for a 2. We know a 2 can go anywhere from the 50 to the 786. So that's a good 2. Note the 233 catches it to the tick. So 1, 2 looks like I'm carving out all the ingredients here for my third. So 1, 2. Some sort of third. Eventually we'll pivot up here. Now that could be the third. We're at 100%, but why assume we won't do what's statistically the norm, particularly given the strength of this uptrend? No reason to assume otherwise. So I'm not in this. I'm not trading Netflix here. I'm not in this trade. So this is purely objective analysis here. No reason to assume otherwise as this rolls here. So if this is a little pullback here, that's likely relative to the internal count. So it looks like I've got 1, 2, 1, 2, 3, 4, 5. So that could be significant. We got to wait and see here. Got to wait and see. But I'd be waiting for a definitive pivot here, where we see a retracement at least of 38.2. At least, right? Here's our wave 1 high. We got to pay attention to that. Now, because it's a fifth, we can allow for overlap if we're going to get a diagonal. This looks more impulsive to me. So I'm not quite ready to consider the diagonal just yet, but if something dramatic were to kick in here and we overlap this one, then we'd be looking at this, trying to dig an ABC out of this, but that certainly looks more impulsive. So we'll wait and see. That's how I read it right there. My view is the next trade is just, if you're not in it, you sit and you wait for the 4. There's the harsh reality of it. You got to wait for your trade. Now, if you're a breakout trader, well, maybe you already took the breakout of the new highs. That's more common trading equities than it is trading almost any other asset. So it's a valid approach to trading in the equity market. Not how I would approach it. I wait for retracements. Put it on sale, then I'll take a look at it. Full retail, not for me. All right, guys, just a reminder, follow us on Twitter. That's Trade Devils, at Trade Devils on Twitter. And if you want to take a look at everything that we offer to you, you can visit us online at our website at Trade Devils. Now, this is Trade Devils with an S, tradedevils.com. We're doing some promos over there to our Twitter followers as well, where you can get access to some free channels that we set up in the Discord, so you can engage with us, get a feel for what the Discord is like, and make your own evaluation as to whether or not you think there'd be some value there for you. So I hope you'll give us a visit. Perhaps we'll connect over on the Discord, or I'll see you on Twitter. All right, guys, that's it for now.